Right now, there's thousands of people on the internet searching for how to start investing and how do you invest with £100. Are you able to invest with £100? And the answer is yes. And today I'm going to go through what I would do if I was starting from the beginning, and if I only had £100 to invest, how would I invest it? Today I'm going to answer that for you guys. If you could, hit the like button. If you're new on here, subscribe. Let's get started. So right now, the education system in the UK is very poor in teaching its students on how to do financial education and how to invest. That's probably why you're searching the video right now, is that because you don't know how to do investing. And today I'm going to try to help you for what school leaves you unprepared for in life when it comes to your investing future. If we look at some of the statistics right now, it says that almost half of school students want to be taught personal skills in finance. And 65% of children say that schools is not teaching them these core skills. And the issue is you get to your adult life and then eventually you realize that you should potentially learn to invest and you haven't been taught it. So for you guys today that want to learn about education in investing and financial education, hopefully I teach you guys something today. So there's a couple of famous quotes that I always think about every day when it comes to investing, and I always think that I've got to invest because I want to avoid these situations, and that is either make your money work for you or you will always have to work for your money. At the end of the day, we all don't want to work, do we? Well, a few people do. You know, if you enjoy your job, you maybe want to go into work, or if you want to have the ability to maybe cut your hours down in your work, or if you want to retire early, or maybe you just want to have that confidence, that comfort blanket that you know you've got that money sitting in your bank account if you ever need it. That's the great thing with investing. That's what we're trying to achieve, isn't it? And when you look at Warren Buffett, my favorite investor of all time, if you don't find a way to make money while you sleep, you will work until you die. And let's be honest, none of us want to be working until we die. We only have one life. We want to make sure we live it to the best, and we don't want to spend all that time working, do we? So first of all, in the UK, we have a lot of great tax benefits from investing, and this is the first thing that we're not talked about. At the moment, investing stocks and shares ISAs is one of the best tax benefits in the UK, and we are not taught it at school. And a lot of people do benefit from it, but a lot of people miss out because they don't know about this good tax break that we get in the UK. So first of all, we have a stocks and shares ISA allowance every year. You get 20,000 of that allowance every year to invest into stocks or ETFs, and all of that profit from dividends, profit that you gain through the year, is tax-free. That's correct. You know, so much we get taxed on. Every time we go buy some petrol, we get taxed on. We go to the shop, we get taxed on. Where we live, we get taxed on. For someone to empty our bins, we get taxed on. Every single time you basically leave the house, there's something you get taxed on. But with this is a great tax-free allowance that not many people use, and they should use, and it's why you want to get started to achieve that tax-free benefit that other people are getting at the moment. Now, first of all, going to the start of the question is, £100, is that enough to invest? And I would say yes. Obviously, it would be ideal if you can increase that amount as you maybe get more income, as you get older, you get maybe a higher paid job, a pay rise. If you can increase the amount of money that you're investing, is going to benefit you. But you shouldn't stop just because you're on a low amount. And here's an example. Right now, I've put an interest rate of 10%. If you're able to get a 10% return on your investments, over a 25-year period, which wouldn't even take you to retirement age if you're doing this from a really young age, and even if you're maybe getting towards a middle age situation where you're thinking, well, I'm 40 now, I'm 50 now, is this a little bit too late to be investing? No, there's really no late time to be investing. And if you are able to put £100 a month in, you can see here that would achieve 132,000. Does look pretty impressive. £100 can get you to 132,000, and that would be 102,000 interest earned on that amount, which is pretty impressive. That's a lot more than just keeping that £100 in your bank account or wasting that £100 on a stupid purchase every weekend. It's definitely worth at least investing £100. But just to show you the benefit, if you are able to increase that to £200, £300, for example, if I was to double that to just £200, you can see the difference here is 265,000. You're a quarter of a way to $1 million there. And obviously the benefit of maybe increasing that from 200 to 300 to 400, if you already have an initial investment to start with, that's really going to generate good amounts of wealth for you later in your life, which is what you want to be achieving. So what would I do with my £100? Because as we can see here, even investing with £100 can create you at least a bit of decent wealth, and it's something you probably want to get started with. So first of all, you need to go get an investing platform. Personally for me, right now, as most of you guys know that have watched my previous videos, Trading212, in my opinion, is the best investing platform. It's the one that I use, and they also offer the ISA, which I said at the start is the tax-free allowance, where you would not have to pay any profit on selling any of this. So if you at any point, let's say you get to retirement age, or you decide, oh, you know what, I'm going to use this money to go pay off my mortgage, and you want to take it out, and if you've been investing in ISA, you won't have to pay any tax on that, which is what you want to do. You want to keep all that money for yourself that you've been saving up for. That is a great thing. So you've got that on Trading212, and it's all free. That's the great thing about Trading212. To buy and sell anything on here, it's free, and you've got that tax-free allowance as well, because you can use the ISA on here. If you do want to join Trading212, by the way, there's a link in the description, and you'll also get a free share worth up to £100 if you do join through that link. So after joining Trading212, for me, I would be investing into an index to start with. For me, I would recommend the Vanguard S&P 500. There would be some other things some other people might recommend, like an all-world ETF. Personally for me, I would say go with the S&P 500 to start with. The S&P 500 is made up of the 500 largest US companies, and that is high quality. And the thing with owning that basket of stocks is that if anything was to ever happen to one business, you would not suffer, because it is replaced and another business is put in there for you. You don't have to do any work from that point of view. So it's a very, very safe net buying a basket of stocks like the S&P 500. And with the S&P 500, you would get an average return of over 10% if we go off historic performance. Now, obviously, historic performance isn't guaranteed future performance. That's something to just bear in mind, but it has returned over the last 10% over the last few years since the S&P has existed. 10% a year is something that you would achieve more than having that money sat in your bank account. Even a lot of the high interest cash ISAs at the moment, you'd be earning more than them. So that is a really good return to have if you were to invest into the S&P 500. And for me, that is where I would start in your investing journey, because there's no stress there. All you have to do is go on Trading212 every month, put £100 in the S&P 500, job done. It takes, 20 seconds, a minute to do that the most, and you are on your way to potentially having a nice investment pot in the future whenever you will need it. Now, for me, I personally invest in single stocks, individual stocks, which comes with a lot more risk. I personally try and achieve more than the 10% return than the S&P 500 and invest in some individual stocks. But with the reward element of trying to achieve over 10% return, I have more of the risk where things can go a lot more wrong for me. And a lot of investors just jump or skip the stage of investing in the S&P 500 and they go straight for the individual stocks. And what we saw in 2021, and I'm sorry about the paywall here that Bloomberg have on here, but a lot of investors in the UK tend to just go straight in the deep end, go for individual stocks, and then they lose all the money and they end up quitting and going, I'm not doing investing, this isn't achievable. And a lot of people, when they start investing, should go for the safety net first before going for any other riskier investments. If you were to go for some more individual stocks rather than buying the S&P 500, so let's say, for example, you wanted to buy the likes of Airbnb, if you wanted to buy the likes of Amazon, for example, or you wanted to buy Google, for example, you could go do that. If you wanted to go buy some B&M because you wanted some dividend stocks, you could go do that. I personally would say that if you're a new investor, I would only be putting 10% of your portfolio into individual stocks to start with, and I would only be picking 3 or 4 individual stocks just to get your feet wet, so you know what you're doing. You need to start getting your process of understanding how companies perform from a share price point of view, how do they go up, looking at fundamentals, the growth in profit, the growth in revenue, understanding valuations like P ratios. It's a lot more tricky when it comes to individual stocks. And what a lot of people do, especially in the UK, is they jump straight in the deep end, and when we have a tough year and they don't know what they're buying and they get absolutely sunk like they did in 2021, 2022, then they all leave the market. So for me, when it comes to starting to invest in, I personally believe the S&P 500 is the best way to start investing. And then if you do want to go to some more individual stocks, then do that slowly and only allocate a small amount of your portfolio, because you've got a lot more to learn. You've got a lot more research to do when it comes to this. With the S&P 500, you don't have to do anything. You just have to dollar cost average, put some money in every month and you're done. Individual stocks is a lot, granted there's a lot more reward to them, but there's a lot more risk and a lot more hard work. Before I started doing individual stock picking, I didn't have any wrinkles on my face. Now I have a lot of wrinkles on my face after doing individual stock picking. It's a lot more harder work, and quite often people just jump to the harder work and they don't know what they're doing and they get stung. It's best to start off easy and then make your way up a little bit. Don't jump straight in the deep end and then you'll scare you off. So that's personally how I would start investing £100 if I was starting from day one. That's my plan. Anyway, I hope you enjoyed the video. If you could hit the like button, I'll see you in a bit.